It's been a very dramatic weekend. It's only Tuesday, but for today's feature, I want to share with you Microsoft's earnings and AMD's Q3 2020 earnings. Both companies has done really well, and AMD has got even special news. So I'm going to share this with you today. Welcome back to Family Investment. My name is Alex Ko, and I want to present to you these two key stocks. So let's start with Microsoft first. Really good Q3 earnings. And previously, I said Microsoft would miss their earnings. I was being really pessimistic. I hold loads of Microsoft, and man, they blew me away. The numbers were so impressive. The EPS was so impressive, and this is building up to Q4. With the Xbox coming out. So how high can Microsoft go? So what did the earnings tell us today? The EPS expectation was 1.54 and they came in with 1.82. They just blew it through the ranks. The revenue, they were expecting about $35 billion and it came in $37 billion. The products are coming out in future, still in development, they're spending lots of money, but in fact they still can beat their quarter. Year on year, the target is still for 12%. Year-on-year, 12% target. The cloud came in 13 billion. It's 48%, rise from 47% previously. The business product, like the Office 365, the Surface, the laptops, all for business trend, are up $12 billion in sales. It was up 11%. So the personal gaming unit, personal tablets, Surface, laptops, and the Microsoft Surface are up about 11.85 billion. It's 6% year on year. It's growing slowly, but people are still buying computers because of the COVID-19. And the fact that, again, I've mentioned this earlier, Xbox is not out yet. Xbox should give them an additional $4 to $5 billion boost because of the recycle, because of the new cycle of products for this Q4 next year. So watch out for the personal gaming area. This will still grow. Microsoft was intending to spend money because they have run about 30% free cash flow. They were intending to buy products to expand their features because end of the day, the Azure, all that will suddenly hit a plateau. But then with this COVID-19, it's helping them boost it a bit and generating more revenue to buy out. So 2021 should be the year where Microsoft will be buying companies to be taking over, try out new products. I have the courtesy to work out the valuation because with a 12% growth, with the EPS forecast for next quarter, which will be, I put it equivalent to this quarter, 1.82, tally all the EPS up of 6.3. And if you do that with a 12% growth, Microsoft is worth $300 per share. And that's about 40% more than where we are at 210. So Microsoft is actually undervalued. Yes, the growth might not be staggering 20% growth, 12% growth might be slower, but they're still growing, they're paying dividends. And then think about it, Microsoft is 25% to the $2 trillion mark. And if they hit $300, it'll be 40% out. So there's still a lot of upside from Microsoft. Microsoft, to me, is a great growing dividend stock. A great growing dividend stock which is resilient with or without COVID-19, with or without working from home. That's how resilient Microsoft is. It's so tough. You cannot stop Microsoft's train. It's not the fastest train, but it brings you to point A to point B. And for me, it's going to bring me from now to my early retirement, and that's Microsoft. If you realize that I've been using all these fancy charts in my last video, and especially for this video, and these charts are from hypercharts.io. I've been using hypercharts for the last 6 weeks and it's been brilliant, amazing. It's helping through my journey really well. So I'll leave a link below for referrals. If you want more visualized chart, more visualized impact for your investment journey, check out hypercharts, my affiliate link below. And now for AMD, they released the earnings before even the market closed. They actually pre-advanced the earnings. But AMD's earnings today was over-clouded. It was just overcast by the buying of a semiconductor company called Xilinx for $35 billion. Yes, and $35 billion, what does it mean? It's all share. So Xilinx was worth about 110 and they jumped up about 10%. And the buy price for Xilinx would be $143 per share. So AMD will pay them $143 per share. So check out the stock. I wouldn't spec and try to go and buy, but Xilinx should hit 143 just before the buyout date. It's not just in the growth story. The growth year on year target this year is 25%. Revenue came in 2.8 billion. Last quarter was only 1.9 billion. Check out that chart. It's amazing. Look at the growth on the revenue. And there was a growth of 45% quarter on quarter and about 56% year on year compared to last year, Q3 2019. And the EPS was about 0.36, but they came in about 0.32. But think about it, compared to the other earnings EPS below, even if they missed by a bit, there's still a huge margin with the last years and also the last 3 quarters. It's staggering, it's mind-blowing on how AMD is really doing well, rebranding their chips, rebranding the GPU, setting up the mark, competing against NVIDIA, and making huge revenue, making huge momentum. And that is the reason why Intel dropped like a carrot last week. So if you own Intel, just dump it. Go buy AMD or NVIDIA. Just make your life easy. If you want to retire in the next 10 years, these 2 stocks will help you retire. Again, I'm back to my intrinsic value. So with the future value forecast for the next quarter, this current quarter and the last 2 quarters, the EPS is coming at 1.06. 25% year-on-year growth. AMD should be worth $90 per share. They're selling at about 78, 79 just now. Please go grab some because there's a 15% upside. For me, there's a 15% upside. 25% is a really great growth number. And the fact this is valuing, not even accumulating, not even accounting for the buyout, not even accounting for the data center expansion, the data center growth. 35 billion is a lot of money. Stable company, great competition, NVIDIA, but there's always room for 2 giants in the room. I want to say this again and again. I've said this about 3 years ago, 4 years ago. On my blogs, I just want to emphasize, I'm just seeing it change before my eyes. Semiconductor is great. Every time it dips, buy. But now the growth story is even bigger. It's more apparent. There's so much concrete evidence. So I hope you enjoyed this video. Please click like or subscribe and check out the hypercharge link below. I really like it and I hope you can check it out. And it's only $99 to sign up for the year for such great, amazing charge just to help you make decisions on buying, selling and analyzing stocks. So okay, have a good day and I hope to see you tomorrow for more earnings. Big day tomorrow. See you soon. Bye.